we definitely see ourselves as the largest bootcamp provider in the world, and then we think we have a great and very bright future ahead. The business can grow at least 50, 60x from where we are sitting today.
Hi everyone, welcome to another episode of Disruptor Talks. In today's very special episode, we speak with Mr. Krishna Kumar, the founder and CEO of edtech company Simplilearn. Simplilearn is the world's #1 online bootcamp and certification provider. Last year, Simplilearn became the first Asian consumer tech company to receive an investment from Blackstone, one of the world's largest alternative asset managers. In today's podcast, we speak with Krishna about his journey in building Simplilearn, his setbacks, and his lessons for younger founders. You might want to keep a pen and paper ready for this one. Enjoy. Hi, Krishna. Thank you for finally taking the time to do this. How are you today?
I'm good, Raj, and thank you for the invite. I think it was long due, so good to know that finally we
Yes,
are doing this.
yes, long due. So, Krishna, we'll keep this fairly conversational. I think there's a lot of people out there who would love to know about your journey. अभी के लिए तो everybody relates your name just to Simplilearn.
Yeah.
But before Simplilearn, you were an engineer. You were with Infosys, and few people know that actually Simplilearn is your second venture. So could you walk us through your journey of from Infosys to
So,
entrepreneurship and then to being a second-time entrepreneur?
so thanks, Raj. I think I'll definitely like to talk about it. So my first venture I started way back in 2000, and if you look back 2000, this startup word also did not exist in anyone's dictionary. So it's way long back that I'm talking about. And the way it started was that I graduated in '99 and had taken an offer to join one of these IT services company, Infosys. And I had a couple of my other friends from school who had joined other companies like IBM, TCS, Wipro, and so on. But when I came and joined Infosys way back in 2000, early 2000, or no, late '99, that time these companies were growing aggressively. Like they were like really growing very aggressively. So one concept during those days used to be bench time. So since these companies were growing
Hmm.
so aggressively, they always used to keep some people on bench in anticipation of getting work. So till a new project comes in, you are just doing nothing. As soon as a work comes, you get assigned to a project. So the ratio used to be like 60% people billable, and as much as 40% people used to be on the so-called bench. And when you look at the like their team strength of 30, 40,000 employees, a good size of people used to be always on bench doing nothing. So I was one among them. So I really got bored after 2, 3 months of like moving around in campus, having free food, free gym, and so on. I wanted to do something meaningful. So when I spoke to a couple of my friends who were working in IBM and Wipro and so on, they were also in a similar boat, right? They're also going to their companies and had no meaningful work to do. So they're also like kind of getting restless that this is not exciting, and there is no they're not looking forward to go to office every day to do something that gives them the satisfaction of doing some work. So we started talking, and that was the beginning of our first startup called TechUnified. So there the common so there we were four of us, right? One of them was my school classmate, and he had some engineering classmates from IIT Kanpur. So four of us started this first business, TechUnified, way back in 2000. Early 2000. And there the common goal for all of us was that let's do something that is satisfying, something that is meaningful. There was no thought about what product we'll build, which market we will go, how will the business plan look like. Frankly, none of us knew there's something called business plan at that point of time, because we had absolutely no experience. All of us had less than 1 year of so-called industry experience of doing nothing, and there was no startup concept in the market those days. Currently, there is so much of information available on YouTube, so many different forums to get to know about a startup, and the ecosystem has got built up nicely in the last 20 years. But that time there was nothing of that sort that existed. So we started our first venture pretty much in our apartment, and then we started getting into the market to figure it out that who can give us work and what we can do. So idea was that we can do some IT services, we can do some training, we can do some consulting, anything that comes our way that can help us pay our bill till we figure it out on what is that we should do. So that's how the first venture, TechUnified, started. I think all four of us were very motivated to do something of our own. So we went through a lot of good and bad times, mostly bad times, because we started in 2000, and 2001 this 9/11 happened. After 9/11, we noticed that the market became really very tough. There's hardly any new IT projects
Right.
being coming to India, or at least we were not getting any. And then 2002 2003 was also a big slowdown time in general, right? Even kids getting to IITs and IIM also didn't get any job offer during those days. I remember hiring IIT grads, computer science grads in TechUnified during those days in as low as 6,000 rupees monthly salary. Can you
Wow.
imagine this? 6,000 rupees monthly salary, because I couldn't afford to pay more, and there were no jobs, right? Customers were not ready to pay, so whatever little we had, we somehow survived those tough times. And then in sometime in 2004, we came across this opportunity to get to Saudi Arabia. Of all the markets, Saudi Arabia was a most unlikely IT industry or IT services market, but through some connects in the industry, we happened to be in that market, and that was the kind of for us the a trigger point in our TechUnified journey. So what happened that we landed in Saudi Arabia and we got some connections in banks, and that's where we realized that banks in every part of the world have a lot of IT systems deployed, because bank is all about data and data being deployed. So the money in your bank account is just an entry into one of the bank databases, right? So they use a lot of technology, and we became part of banking system there, started doing a lot of work for some of the largest bank in Saudi Arabia, and that gave us a lot of exposure to think about what might be lacking in the market. And through that exposure of working in bank, we came out with our first product in TechUnified called Customer Connect. It was an SMS banking platform. So what that product used to do, it was a plugin that we used to integrate with a core banking product or an ATM solution or an insurance product that the bank had. And whenever you do any transaction, it used to send alert. Now this has become a
Right.
default behavior, right? Anything that you do, you get an SMS alert. But I'm talking about 2004. It was still a new technology. So our Tech Unified Customer Connect product became very popular. One of the large projects that we owned for that particular product was from Citibank. So when Citibank implemented it in Saudi Arabia, it was a huge success, and that led to a lot of other banks inquiring with us about taking this product and deploying that product within their infrastructure. So we had a pretty good run from 2004 till 2007, selling this product to multiple banks across Middle East and Eastern Africa. Then we also diversified to other related products. So Customer Connect was a mobile banking, SMS banking product, not really mobile banking. Then we also built a phone banking solution called Self Connect. All this did really very well, and it was like 7 years that we ran this company in a pretty much bootstrapped manner and profitable product focused company. So in 2007, we started thinking about what next, and that's where we ran a process, and we sold this company to a listed company in India called Warji. In fact, you already know Khetal Advisor and Kunal Walia. So
Yeah. Yeah.
this was the first assignment that became the starting of Khetal Advisor. So Kunal
Right.
used to work in a I think in one of the venture fund he used to work, and he wanted to move out and start his own investment banking firm. So this is the first mandate that we gave it to him, and and it was a mandate given to Khetal even before Khetal became Khetal. So
Right.
that's a short story of our first venture TechUnified.
Yeah, I think it's funny to look backwards and connect the dots. That's how, like, you guys came together, and later I came met you guys. So it's great to see how all of that strings together. For Krishna, there are VCs who have their own ideologies towards different founders, right? Vinod Khosla in the Bay Area, उनकी एक philosophy है that if I'm building, for example, a healthcare company, I will not want a healthcare CEO. If I'm building, a manufacturing company, I don't want a manufacturing CEO. I want somebody who can think about the assumptions from the ground up, right? The basic of that, ideology is that कि जो 0 to 1 disruptions होते हैं. For example, if you look at the media sector, the disruption didn't come from BBC or CBS, it came from YouTube. If you look at disruption in retail, it didn't come from Walmart, it came from Amazon, right? Which is actually the entire piece around founders moving to newer or other avenues in which they are not experts, right? My question from that point on is that you did all of these different pieces in banking, in fintech, in IT. What was the transition? What was your mindset like moving to edtech?
So I think Raj, so the great point, I think obviously Vinod Khosla is so successful, and if he says something, we better listen to him. And of course, there's a lot of data point to suggest that what he's saying is totally backed by data. But having said that,
Right.
I'm sure there are people from the same industry also who have looked at the challenges of the industry and done something to like really
Exactly.
change the trajectory of the industry. In my case, in particular, I think both the Tech Unified venture and the current Simplilearn, they are not well thought out venture. So Technified, I told you
Hmm.
the story that we were not doing anything. We were not intellectually satisfied. So we thought that let's do something, and then we stuck together with no plan, and ended up at least having some exit, some exposure, and that was a good exit. I think when I look back, I don't think I have any complaints about what we did in Technified. It was way before time. In case of Simplilearn, what happened that once I moved out of TechUnified, I was kind of in between job. I was trying to figure it out that what do I do next. And since I had a good exit, not in a hurry to do something fast, so when I started talking to people around me, like other entrepreneurs, other investors, and people of that, like people of our ecosystem, right? From
Yeah.
2000 to 2008, the ecosystem has little bit improved, but still very very early. So everyone was talking about internet as the next big deal, that internet is going to disrupt this world and it is going to be a big force in our life. It has actually become a big force, but imagining that in 2008 was not that easy.
Hmm.
2008, still people were primarily using internet for mostly email and those kind of basic services. In fact, Flipkart also had just started in 2008 2009 time frame. So when I heard that everyone talking about internet, I thought that why not I learn internet. See, my previous venture was a enterprise software product company, right? The selling
Right.
solution to banks, and banks are large enterprises. So I started Simplilearn as a blog. Two interests of mine got aligned with this blog. One, I could learn internet on my own, and I also love writing. So it was like both the interest getting to one single blog, that I could write anything on my blog, and of course in the process I'm also learning internet. So that's where I got exposed to online traffic, SEO, how user come and interact with your website, and so on. So it was a part-time learning opportunity for me, that Simplilearn came into existence, and I kept running it like a personal part-time blog for about 18 months. I used to write a lot of articles on project management, and that's how a lot of followers of these blogs were people who were project managers. So when they started
Right.
listening to me, they started commenting on my post. They started talking about that. Okay, you write so much on project management. Why don't you help us prepare for PMP exam? Now, PMP is a very popular exam that a lot of project managers across the world write. In fact, I was also a PMP because of
Right.
my Middle East exposure. I had to do this certification myself, so I knew about the process and the value of that exam and the value of that credential and so on. So when I looked around in internet in 2009, there was hardly any resource for people to prepare it online. The only way they could write the exam is that take an offline bootcamp, 5 days classroom training, and then write an exam and get certified. So I thought, why can't this be done online? So that was like the original, I'll say, the thesis behind starting like what has become Simplilearn now, that create online training,
Right.
let people learn on their own with a very clear objective that okay, you're taking this program not for fun. You're taking this program because you have a very clear cut goal at the end of the program, and till date that's exactly what we do. We all our programs are very well curated with a very clear outcome at the end of it. You want to become data scientist, we have a program for that. You want to become a product manager, we have a program for them. You want to become a project management certified professional, we have a program for. So that's the current business, and that's how it started. It just started again by chance. So I've never done, at least I have not done anything deliberately that this is what I want to achieve. So let me work backward and see if there is a market for that product or not, and then go about building a business plan and going and achieving that business plan. That has not
Right.
been my style.
Right. So very interestingly, Krishna, the start of Simplilearn was also pretty much around the time that venture capital in India was really kicking off, right?
Correct.
2012, and say 2012 and 10 years now, since, right? 2022, venture capital as an ecosystem itself, right, has evolved a lot. Amount of capital inflows, the number of investors. What are the stark differences that you see, and broad basics from what it was, and what are the opportunities that you see now for the startup ecosystem?
So Rajan, a lot of things have changed. I think one of the best change that I have at least seen, that in 2008, even till 2012, 13, 14 time frame, entrepreneurs used to run after venture VCs, like people who were so-called VCs working in VC company. That trend has now reversed. I see a lot of investors running after successful entrepreneurs, or the entrepreneurs that they think can run winning businesses, because there's so
Right.
many new funds that have come into the market. So that's a
Right.
really good welcome change, right?
Right.
Since I have been an entrepreneur for the last 20 years, and I have pitched to all the early venture funds like Kalari, Sequoia, Hillian, and so on. I see that many of those like the new venture funds are founded by people who used to work in these companies. So when I today look at many venture funds, I have interacted with them when they were like principals or associates in this firm, and now they are running some of the most successful venture funds in the country. So definitely it's a big change. A lot of funds. They, so that is on the fund side story. If you look at people who invest in this fund, that ecosystem is also getting to maturity fast. So a lot of this venture funds are actually raising money from people who have made money through the startup ecosystem. So I'm aware about at least 7 or 8 funds who have raised money completely entirely in India from HNIs who want to participate in this category. So in general, I think investing in a startup has got established as a new investment vertical, and that's a really a good change. If you look at other industries,
Hmm.
there is a if you are not coming from that industry, people who are already very well established in that industry actually don't really encourage much. Like we've heard about film industry, we've heard about so many other industries. Being an outsider getting is not that easy. Even for that matter, politics, right? Look, a lot of
Right.
young politicians come from political families. So there are a lot of industries where outsiders are not welcome. I
Right.
think this tech industry is one such industry where every person who is part of the industry is actually encouraging others to join in. Like if you look at
True.
the number of new startups that are starting and the amount of funding that they're raising from entrepreneurs who are ahead in their journey, right? So that's also a welcome sign. I've seen a lot of my friends from the industry say that when any of their employees decide to start something, they end up investing in that company. I have done it. Like whoever has left Simplilearn and came back to me with a pitch, I have invested in those companies. So this is also another big ecosystem change that we should
Right.
celebrate. It's not so common in other industries.
Krishna, I'm also one of those examples, right?
Yeah.
That's what my partners have done. Shashwat Kunal have done, right? So yes, I think that's been a very welcome change. At this point, I think it'll be good for us to also hear about your fundraising journey, because at this point in time, Simply Learn, Blackstone, everything looks very hunky dory, right? But it hasn't been it wasn't always a smooth journey. There were a lot of roadblocks in the way. Could you talk us through what your fundraising journey was like?
Yeah, yeah, Raj, definitely. I think when I did my first fundraise, I think that was relatively easy, and I'll tell you why it was easy. See, when I started this blog and it became an online training company, at least I personally saw a huge success. Like within a year's time frame, we were doing about more than $100,000 in monthly revenue, and making $70,000 profit per month.
Wow.
Huge, right?
Hmm.
We hardly had 10 people, 10 odd people within the company. So I was in a very, very comfortable place. And the question was that why should I raise money from anyone? I'm making so much of money, and it's a work that I'm enjoying. So there's absolutely no point for me to get another external investor and meddle with affairs. I'm in charge. So that was my thought process. But that's when I met Sashwat. And Sashwat, he had joined Kunal in Khital Advisor by the time. But Sashwat was also my co-founder in my previous company. So I used to talk to Shashwat very, very frequently on what's going on. And one of the ideas that he like started putting into my mind is that, see, anything that you can build within 12 months with minimal capital can become $100,000 monthly business with $70,000 profit. Is not going to be sustainable, because somebody who has lot more capital can replicate this and maybe make it much bigger. So
Right.
before somebody else does it, you only raise money and try to build some few things so that it's not easy for others to get in and do what you are doing. So I started thinking about that idea, and then I eventually bought into that concept that, if you don't create barriers, then somebody else will come and hit you and go past you. So that was the starting point of thinking about my first fundraise. And that's where I approached a couple of venture funds, and we got relatively easy success during that time, because the business had grown so well without using a lot of capital, that we attracted and got our first Series A. And during those days, Series A used to be like anywhere from 1 million to 5 million. We had raised 3 million Series A, so it was a pretty decent Series A at that point of time. And the business continued growing after taking that money. So we raised Series B also within less than 12 months in time frame, and our Series B was of about $10 million. So again, a very pretty good. So from 12, so Series A happened in 2012. Series B happened in 2013, 10 million. Again, very good success. We used that money to grow further, and we also raised Series C in 2014. Again, about 1 year, 15 months time frame of
Right.
50 billion. So it was a pretty good journey from 2012 to 2015 for our fundraise. But in 2015, we saw a trend that our business was pretty fragmented. We used to sell video as a self-learning program. We used to sell video plus interactive live classes on internet as what we used to call LVCs, live virtual classes. And we also used to sell like physical classes. You can select any of these options to do any of our program. So
Right.
when we started deliberating in our board, we concluded that it's a very complex business. You can't offer the same product in three different variant, which is not very easy to explain that how is one variant better than other variant. So we took a conscious call that we want to become an edtech organization, and edtech still was like way too early in 2015. So let's kill this physical format of our training, where a training used to happen in physical classroom. Let's kill that format and let's focus only on interactive live classes on internet. So when we took that decision in 2015, it impacted 75% of our revenue, and we literally decided to let go of 75% of our business. It was a pretty big, bold call because we were at 100 crore revenue
Wow.
at that time, and we let go of 75 crore of revenue one fine day. So we're left with only 25 crore of revenue, and the cost structure which was built for 100 crore. Now that got us into real trouble for the next 2 3 years. So while I still think that was the right decision to do, had we not done, I think we would not have been talking today. So we
Right.
decided and took a call that was good call for the future, but it was a tough call. Letting go of 75% of our revenue is not that easy. We had to also do some optimization of our cost. But the best thing that I learned during the process is that if you have a very very strong team which is well sold about the vision, you can build whatever you want to build.
Right.
But at the same time, when we went to the VCs and told that here is our story, don't look at what we had done 100 crore. Look at from 25 crore onwards. Frankly, we were not able to convince them. I think we didn't had a successful run in 16, 17, and by the time we were in 18, many of my investors, the original venture investors who had participated, they had their this whole clock over, right? They wanted to
Yeah.
the time. This is always invest with a certain time frame. So the time frame was over. So they were looking for an exit. So 2018 onwards, we started. We couldn't go out and raise money in the market because my investors were looking at ways to exit, and that's where in eventually we started. We had, so from 2019 20 also we got multiple offers for people to come and take a majority stake in Simplilearn and give some exit to our investors. But for one reason or other, things didn't work out. Either the valuation was not good, or we didn't like the person who has put the offer on the table. So eventually, in 2021 is when we got Blackstone as a partner, and we're very excited about the future that we're going to build together. I think we definitely see ourselves as the largest bootcamp provider in the world, and we think we have a great and very bright future ahead. The business can grow at least 50, 60x from where we are sitting today.
Right. No, I think that's a very 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 interesting story. I will get to the Blackstone story of it as well, but before that, one of the things that you guys did somewhere in the middle of your journey was also decide to go global, right? Was it after this step of letting go of 75% of the revenues, and how much of a role did that have to actually making Simplilearn a global company?
So Raj, actually, incidentally, it's not that we decided to go global later on. In
Hmm.
fact, we were global from day one. I'll tell you how it became global from day one. So I told you that it used to be a personal blog that I used to run. So
Right.
when people said that, okay, help us with PMP exam prep, I actually built curriculum and kept that curriculum on my blog for free. So at some time point of time, when I decided that it's going to be a paid offering, I put a PayPal button on my blog,
Hmm.
and it was Saturday evening. Sunday morning when I woke up, I had seven payments. And that was kind of
Right.
eureka moment that okay, within 12 hours on a weekend I have seven payment. And out of the seven payment, four payments were from US, two were from some Middle East and Europe, and one payment was from India.
Oh
So we
wow.
always kept the business that way. That
Right.
okay, because if you look at our programs, the programs appeal to everyone across the world. So what we have done is that so from that point onwards till today, whenever we build program, we always build global program. We keep global audience in mind and then we build program, and that has worked really well for us for a long period of time. But now, off lately, what we are doing is that because of our size, we've already got to a certain size that for us now localization has become important. So now
Right.
we are when thinking about building product. We are thinking that what product India mein chalega, what US mein chalega, what UK mein chalega. This is something that we have started doing now. So from 2010 till 2021, it was one global product being sold across the world. Only
Right.
this year we started making, like we recently launched this job guarantee program in India. That's a
Yeah.
program only available in India because India we saw a huge opportunity for entry level tech talent,
Correct.
and we took a shot that okay, and we spoke to our customers. We have like, if I tell that I have 20,000 openings, if I can train 20,000 people on full stack, I have like customers ready to hire these people.
Right.
So based on the demand forecasting, we launched this job guarantee program in India. Similarly, we have launched some US specific programs which we only sell in US. We don't sell it in India.
Right. Now I'm going to come back to the question of Blackstone. Recently, I saw your selfie with Steven Schwartzman, I think the founder of Blackstone. For people who don't know, Blackstone is the largest alternative asset manager in the world. They have, I think, around $880 billion under management now. They are eyeing about $1 trillion. Why this is a big deal is that Simplilearn was one of their first consumer tech and private equity investment in the space, right? So tell us about the story of how that started, how do you made that happen, and when did it really feel that okay, this is actually happening?
Yeah. So that's actually as I was telling you that my investors, the early VC investors who had participated in my Series A, B, and C, they wanted an exit. So we ran a process. We used a banker to find buyers for their equity, and we got multiple offers. Blackstone also showed interest, and frankly, we had multiple offers, and Blackstone offer was not necessarily the best offer financially. But when we looked at as a management team, when we looked at Blackstone track record, we really got very excited to work with them. So it was like both sides. See, Blackstone wanted to get into consumer tech, and this is their very first investment. In fact, Simplilearn was the very first consumer tech investment by any private equity in India. If you look
Wow.
at most of the private equity, most of the consumer tech investments are from venture funds or maybe like
Yeah.
funds like Tiger,
Right.
which are again a different kind of hedge fund, right? What the
Yeah.
way it is called. Private equity generally they invest in profitable, stable businesses. So this was also a trend. After Simply and Blackstone investment, we have seen a couple of more private equity investment happening in consumer tech, but we are a
Right.
kind of a trend setter that way. So when you looked at Blackstone track record, we really got very excited that they have the network, they have the know-how, and we must be the smallest company in Blackstone portfolio, frankly. Because Blackstone has most of the companies have. I don't think they have any other company other than Simplylearn that has less than $1 billion in annual revenue.
Right.
So when you looked at the track record and it met very well with my personal ambition, I always wanted to be a large global tech firm. So I thought that if you partner with Blackstone, I can we can definitely achieve go ahead and achieve that objective. So far it has been a very exciting journey. I think the way private equity thinks about business and the way VC thinks there's a lot of difference. The mindset at the private equity end is of that of a owner. They are on the same side of the table, whereas in case of a venture fund, it's always investor versus promoter in many cases. I'll give you an example. I'm not aware about any venture fund investor who has not taken extra right over their equity compared to the founder. One of the draconian right is liquidity preference. That though they call themselves as an equity investor, in case of something goes wrong, they get money first, and then employees and founders they get money later on.
Right.
I'm aware about so many different deals where company made some end, but neither the employees nor the founders made any money. But actually, the venture fund made some money because they had liquidity over the stock. Like in
Correct.
case of Blackstone, there is no liquidity. Be it employees, be it founders, be it Blackstone, we are in the same equity class. So that I found to be a plus sign when it comes to working with a platform like Blackstone, and that definitely shows that we are in the same boat. We are not that we are playing two different camps trying to pull the ship in two different directions. So that part I really liked about them. Plus their global know-how and global network.
Right. No, I think that's very true, Krishna. And this entire thing, your mindset of playing the long game, right, has actually put you in this very special archetype of founders who've actually been doing this for 12 years and are ready to go on another 10 rounds with the likes of Blackstone. But it's not always been this way, right? I think once at lunch you had mentioned to me that as an entrepreneur you've been through three near death experiences,
Yes.
right? And you have come out of it stronger. That's without question. Could you tell us about what was your mindset in those times when you were going through those
Yes,
phases?
I think every entrepreneur goes through the journey that things are not always good, right? You plan for
Yeah.
something, things don't happen as per the plan. For me, my biggest challenge was this 2015 taking a call to shut down my classroom business, and leading to 75% of the business declining, and then building the business again and raising fund during that period. So it lasted for a long time, right? Towards the second half of 2015 till almost end of 2018, right? So almost three and a half years, we had a very tough time because we were not able to raise money because when they looked at our track record, say that oh, from 100 crore to 25 crore, you have degrowth. Like build the business back to that level, and then we'll talk about it. So that was a period wherein we had to work really very hard to innovate, to make sure that we are always motivated. Because when you talk to investors and everybody says that okay, come back to us later on, it's not a great feeling to be in. At the same time, we always hired and attracted and retained some of the best talent in the market. So telling our team members saying that okay, this is a temporary phase, let's build the best product for our customers will come and buy our product, they'll refer us, and eventually we'll build a large business. So showing them this whole path is not that easy. In fact, more than Blackstone coming and investing into Simplilearn, I look at that as one of our biggest achievement, that we were able to get gain trust of our customers, we were able to gain trust of our team members who really helped us reach where we wanted to reach. I think that's not easy, right? That's very difficult, because they're also hearing that, okay, this competitor is raising money, that competitor is raising money, what's wrong with us? Now it's not so easy to explain publicly within the organization. So many different variables at work, that mean investors are not supportive of raising fund, they want to get an exit. We have done some business changes that has led to fall in our revenue. So combination of these two things has got into where we are. But the future is still bright. Let's build great product, innovate, become better than our competitors, become more capital efficient, but eventually we'll see a good day. Is very tough.
Absolutely. I think you know how in sports you'd look at an athlete and you'd say that you look at his strength, his technique, and so on. For an entrepreneur, looking at their emotional, mental endurance, I think that is a very good leading indicator of how far you will get. Would you have any advice for young founders who are maybe struggling with their ventures at this point in time? How should they look at this and look at their future at this point in time when they are at a low?
Yeah, so I think, Raj, I always give this advice on every forum, and I'm still going to talk about the same advice. See, what I've seen is that many entrepreneurs want to become an entrepreneur because it's an in thing, and they want to get into an industry because that industry has a lot of fundraising potential. I think that's not a great strategy in my view. Some people might get lucky that they might have a large investor backing them from day one, but you can't plan your venture based on that scenario. Whereas if you look at an alternative, that there is a industry or there is a product or there is a problem statement that really excites you. You think that I definitely want to give a good shot of solving that problem, and while working on solving that problem or being part of an industry, you get satisfaction that keeps you going. If that is the case, then you can really run for a long term, and in the process you'll end up hiring co-workers who like to get associated with you, and you can also attract investors. So choose an industry or a product or a problem statement that really gives you a satisfaction that, okay, I'm doing something that I always wanted to do. Even if the venture is not successful, the learning will be like worth it, and
Right.
maybe someone will value that learning and maybe give you a good role in going forward in future. So that's the main point. You should not plan a business thinking that tomorrow somebody will invest and that's how the business will grow. What if that
Right.
investment doesn't happen? Good chances that if you build a good product, good traction, investors will also follow. But I think you should not build a business keeping that as a base.
Right. One of the things when I was writing the thesis for Disruptors was that the founders should have inspired curiosity, right? Which is basically from the bottom up, because when the going gets tough, and it's such a long journey that inevitably at some point it will get tough, right?
Yes.
It is not the money or the VCs or anything else which will keep you going. It's the inherent passion for the problem you are solving, right? So totally agree with you there. Speaking of even the industry that you got interested in, which is edtech, it has evolved a huge amount even since 2012, right?
Yep.
There was a time where nobody was looking at edtech, people weren't sure how big the market was going to be, and now I think I just read a news where Byju's is leading the founder himself is leading a round valued at $22 billion or something like that, right? So there's a huge change which has happened in the industry in the last 10 years. Where do you see the change happening in this edtech space, and how do you see the edtech space in the next 10 years?
So I think, Raj, one thing that has happened, as you rightly said, that this was not an industry that was recognized as an industry. People thought that it's a very small, good lifestyle business can be built around it. It's not a real problem solver and so on. But that's already has got busted, especially in the last 2 3 years. We have seen huge spikes. A lot of companies have got built in, and it has become a category that it should have become long by, but never let the never. Now, how I see going forward is that, see, I'm a big believer that this is a global opportunity. What we are building is not only building for India, we are building for the entire globe. So next 10 years we will see some of the largest edtech companies being coming out of India. So we will see the success that IT services has seen from India. That you look at any cut, the large companies or mid-sized companies or small companies, Indian IT services company rule the global list. Something similar is going to happen from in our industry also. Big believer of that. And still, while we have seen huge growth in edtech in the last couple of years, still it is not a category. It's not a product category that everybody is subscribing to. Like people when
Right.
they get into job, they think about buying a car, they think about buying a house, but people don't proactively think about that, and they think of that as an investment. That okay, I'm doing an investment in a house, or I'm buying a plot, or I'm getting into some stock. People don't inherently think about that. What is that I'm investing in myself? And edtech is one such category that if you're not investing in yourself, the world around you is moving so fast that you will be out of that world very soon. We have not
Right.
yet, collectively, all the edtech companies globally put together, we have not been successful in creating that as a category. But I think that next 10 years that will also get established as a category. It's a question of what you're learning and from where you're learning. The question will not be that whether you're learning or not.
Got it. And what does the future have in store for Simplilearn, in your opinion?
I think simply learn we keep answering this question for ourselves every day. And what we have concluded is that if we continue to do what we do and try to improve every other day, I think we are always going to be relevant. In a technology world, it's not so easy to be relevant. If you start taking your position for granted, a new player will come you and disrupt and displace you. Right? It happens in all industry, and especially if you're a technology powered industry, then the chances of this happening is much higher. So what we do at Simplilearn when we deliberate internally over our plan is that we do a very close monitoring of what is happening in our ecosystem, and how do we improve, how do we do things that we are doing, the things that our customers like better and faster every passing day. So I think nothing new. We just want to be the trusted partner of our customers, that when you think about upskilling, think of Simplilearn.
That's wonderful, Krishna. We now move to the final part of the podcast, which is a very quick 5-part rapid fire. Yeah, so you have to answer very quick, and it's gonna be very
Sure.
simple answers. Okay, okay. Here we go. The first question: your biggest fundraising tip to first-time entrepreneurs.
So I think the biggest tip is that okay, don't just rely on one investor. Make your entire list and pitch to everyone together. Don't go one by one. Just pitch to everyone. You don't want to like be in a place where one guy shows interest and then you spend all your time with that particular guy, and then you're potentially leaving other investors who might have shown interest and might have given you a better term.
Fair enough. Second question: your most trusted venture capitalist in India.
I think I like to pass this question because one, I think I've already passed that particular stage of like working with venture capitalists. So I like to pass this particular question. And plus, it's also not a good idea to name someone, right? Both good or
Okay,
bad.
okay, fair enough. Your on you watch Shark if you should watch Shark Tank India, who's the shark in Shark Tank India that you relate most closely to?
So actually, Raj, frankly, I don't watch Shark Tank India, so I've not seen most of the episode. But if I have to like whatever little I've heard from my son who watches this episode, I think it will be closer to Pius Bansal.
I thought so as well. Fourth question: what is your top tip for hiring in today's market?
So I think that my first before the hiring itself, the biggest and most important tip for entrepreneur is that prioritize hiring. So if you have a scenario where you have to meet a potential candidate or a potential investor, meet potential candidate first. A potential investor will always come to you if you're building a good business, but a potential good candidate has so many different options to offer. So I
Yeah,
think hiring is important, and hiring is also a process. That any position that you have to talk to multiple candidates, sell your vision to all those candidates. The same vision might attract someone, same vision might distract someone's, right? So it's a process, and don't get disheartened if some of your employees are taking your offer, but at the last moment deciding not to join. This is pretty common. If it is happening with you, you are not the only one. It's happening with everyone. So relax and keep building the pipeline.
that's a very good piece of advice. Now, the final question: what is your one piece of advice for prospective entrepreneurs who are looking to start up in today's environment?
Yeah, so I think Raj, as I mentioned previously also, that if you're looking at a starting up, decide whether the product that you're getting into or industry that you're getting into or the problem that you're solving, are you really passionate about that or not? Will solving that really will give you real joy or not? And what if you're unsuccessful in solving so? Even if you're unsuccessful, will it give you the satisfaction that at least I tried and gave a good try? If the answer is yes, just go for it and don't worry about it. There's a very strong ecosystem that supports all kinds of entrepreneurs. Most likely you'll be successful. And even if you're not successful in building a great business, I think the learning will get rewarded by some other entrepreneurs or by some other firms.
Oh, fair enough. Since you passed on one question, I have one extra question, which is the final one for you. What is the one thing in your entrepreneurial journey now looking back that you would do differently if you had the chance to?
I think all these ventures that I had, and for, of course, TechUnified and Simplilearn were two main ventures. I also had tried a couple of smaller ventures in between, and they went to for different size. They didn't become significant like TechUnified and Simplilearn. Were very unthoughtful venture. I just got into it. Right? This idea attracted and just started working. I think if what I am today in terms of learning, and if I go and place me back 20 years back, maybe I will just do some more thinking, maybe do some more structured in our planning, and then go about executing it. I'll not just start it, right? So I think that's one thing that that I'll do differently.
Right. So no move fast and break things. Take it slow and plan things. That would be
I'll not
the
say take it slow, I think be more thoughtful. So
fair enough.
maybe find a balance between these two approaches. My other approach was just get it going.
Right.
It will be more balanced approach between these two.
Right. Great. Krishna, thank you so much for taking the time. This was a very insightful conversation, and I hope a lot of people got to take away great amounts from everything that you had to say. Hopefully, we'll get to do this again very soon. We wish you all the best for Simply Learn, and hopefully, you will achieve far greater things than you already have. Thank you so much for
Okay,
your time
Raj,
today.
it was a pleasure talking to you and look forward to talking again. Have a good day. Bye bye.
Thank you. Bye.